Look, I've been in the market for 8 years now and I've seen it all. You place a trade, you set a TP, you set your stop losses, and the very next second you see your stop loss gets taken out, probably by a wick or an aggressive move, and then it literally hits your target. And I get it, that's the most frustrating feeling ever. But trust me, here is a very cold and hard truth. It's not always the market, it's probably your mistake as well. You're taking the most obvious route. You're placing your stop losses in the most obvious places, and that is how most of the retail traders are doing it. So in this video, I'll help you understand how to not place your stop losses at the most obvious places and how to make the most out of this market. So let's get started. So the very first thing that I'll be starting with is the most important pointer, and that's bringing a shift in your mindset. So right now I'm looking at my charts, and when I'm trying to take a trade here, let's say I have a bias that market will move higher. So this is where I would go long. Now I might target the previous highs or whatever would be the logical target as per my strategy. Most of you guys would place it somewhere around here. And now what's the logic behind this stop loss? So the logic is that we are covering the previous lows, but everyone is doing out that. So what you want to be doing is not placing a stop loss at the most obvious place, but that is what I've already said. Now let me bring it into action and help you understand what are the different pointers that you can be following, which will help you to not get triggered with a stop loss. So the very first thing would be stop thinking in terms of numbers and percentages that, okay, I would only give a stop loss of $200 on Bitcoin, or I'll only give a stop loss if Bitcoin moves, let's say 0.5% or 1% against me. That is not how you trade. Now, for example, if my strategy or if my mindset says that I'll only take this trade for buying, let's say whatever the target is, does not matter. But my stop loss is not on the basis of how the market looks like or what are the candles telling me, but I only take a $200 move against myself. So according to that, currently the price is somewhere around 102.200 and I'll place it probably at 102. Now technically that makes no sense because the price obviously needs some space to move and then either give you a breakout or breakdown or whatever it might do next. So that is not how you trade. Never have a fixed percentage or a fixed number that, okay, if Bitcoin moves $500 against me, I'll get out of the trade, or if Bitcoin moves, let's say 1% against me, I'll get out of the trade. So that is literally the very first thing that you need to stop doing. That makes no sense and it is only making you lose a lot of money. So I've just covered the first pointer. Now moving to the next one is the most obvious one, placing your stop loss below or above the previous highs and the lows. So again, target does not matter. Let's say whatever on the basis of your strategy was the target. But here, the stop loss is getting placed below the previous low. So that is what we were talking about earlier. Now, the chances are extremely high based upon this given context of the market that the price might keep on ranging, God knows for how long. But yeah, it keeps on ranging and ranging. And now, there are a lot of SLs placed below this low, just like yours. So the chances are very higher that the market might just aggressively dip down, take out your SL. Basically, it was not just your SL, but a lot of liquidity that got built throughout this range formation, everyone placing their SL below the previous lows, just like how you did. Price goes below, takes all of the stop losses out, and then it just reverses. So now, even though your whole analysis was correct, you waited for 2 hours, 3 hours, 4 hours, or probably even for a day on a slow market. And then in the end, you get to see that you just got stopped out and now the price has started to move in your direction. That is the most frustrating feeling ever. And I can understand, I've been there. And that's the reason why I'm making this video, so that I can help you to get out of all of those kind of situations. And if you guys are liking this video, guys, make sure to hit that like button and subscribe if you are new to this channel as well. So that was the second point. Now moving to the next pointer, and that's again something which most of the traders are doing, and that is placing your SL based upon indicators. You guys are using any kind of random indicators. And if you just use that to place your SL, chances are very higher because it's the most obvious place where people place their SL. Now, for example, let's take Bollinger Bands. If I try to buy at this position, let's say just for the sake of example, if I'm buying here and if I place my SL just below at the center line or at the bottom, the chances are absolutely higher that price might just take me out, hit the SL and reverses, or probably takes the lower band out and then reverses. So even though my analysis was correct, my bias was correct, but because I'm following the majority, so since majority of the traders are getting wrecked, and if we know what exactly they are doing, let's try to counter trade that, right? Let's be smart. Let's not just follow the crowd, but make our own decision based upon logic and not what everyone else is doing. So it's very important that you do not place your stop losses just on the basis of indicators, because that makes no sense at all. Now, if you ask me why, why not place your SL below the lows and the highs, or using an indicator or something that makes it very easier for you to trade? But let me answer that. If it's easier, everyone would have done it, right? And it would have brought in results as well. But the most obvious places, the most obvious levels, and the most obvious indicators, they are nothing but just building liquidity in the market. That's all that they are doing. And you don't want to be a part of the liquidity hunt. You want to be someone who gets along in the trade where liquidity hunt happened, and now you're in the trend with them rather than being the victim. You're capturing the moves. That is what you want to do as a trader. Now we've talked enough about the whole mindset shift and what everyone else is doing and that you're not supposed to do. But let's talk about what the professional traders are doing, what the most experienced traders are doing, and you should probably learn from them as well. So the very first thing that they do is take only logical decisions. Not just because there's a random red candle, so they'll place a SL above it, or just because there is a green candle, they'll place their SL below it. That is not how they trade. Let's try to break it down. Let's try to understand it even better. Now, just for the sake of example, let's say we were planning to take a liquidity sweep trade, right? That's one of the most followed trading strategy. That is one of the most hyped words in trading as well. Let's say we had this top that Ethereum made. Price started to go lower. Now, anyone who was shorting at any of these levels would have either placed their SL above this highs or the most obvious highs as well. So there would have a lot of stop losses built above the major high that Ethereum made. So now we were looking to get into a liquidity sweep of this particular top on Ethereum. That's perfect. Now, when you tried to get into a trade here, what you saw was that, okay, you mark this as a level, price grinds slowly towards the upside and then takes it out. Right at once, the liquidity has been taken out. But what do we do here? How do we enter this trade? Now, I'm not going to be talking about the whole in-depth strategy. But here, let's say since you were having a plan of a liquidity sweep trade, as soon as the market went higher and closed below that level, you probably got into a trade here. Now, how do you place your SL? Do you just place it above the previous high, or do you just cover a particular 1 minute candle? What do you do here? The most logical answer to this is placing your SL above the liquidity sweep candle. Now, what was your logic? It was a liquidity sweep trade. So, if the liquidity sweep is done and the price has started to go lower, that's in your favor. But let's say at a certain importance level, Ethereum has started to reverse from. That's not even the matter, but yeah, let's just take it for the sake of the video. Now, the Ethereum has started to reverse against your trade. If it goes above this level, that means the liquidity sweep is either done or the trade logic is invalidated, because sweep was done. Now, the trade either moves in your favor or it does not. And if it does not, where does the trade get invalidated? So it gets invalidated above the liquidity sweep candle. So it's that easy to place your SL. That makes sense, that makes logic, and not just covering a random number just because there was a psychological number at, let's say, 4,000 or 3.5k at Ethereum, so you'll place it there. Or just because your VWAP or moving averages or Bollinger Bands tell you to place it randomly somewhere, you'll place it there. No, that is not how you trade. You trade on the basis of logic. So that is another important pointer. Talking about the SLs. Now, most of the guys think you use a SL to protect your capital. In a way, that's absolutely correct. But it's not just about that. Your SL is supposed to be at a position where the logic of the trades get invalidated. So as I said, if I've took a liquidity sweep trade, my trade gets invalidated as soon as we go above the sweep candle. That is where it gets invalidated. Now, that's the point of SL. SL is not just to save funds or help you not get liquidated. Obviously, that's part of SL. But the most important pointer here is that it makes your trade valid until it's invalidated. Now, that was the first part of a professional approach towards placing your SL. Let's take another example. Let's say you have an engulfing candle at your support level. All right. So just for the sake of example, let's take this particular candle. So the market got a pretty aggressive dump. All right. That's perfect. We hit our level. But this red candle gives me no reason to buy here. That's pretty obvious. This second candle, on the other hand, it makes me feel like that, okay, the buying trade that I was planning, probably is still valid because here I see some kind of weakness. Again, it's weakness and not confirmation to get into a trade. But as soon as I see this kind of candle, which is pretty aggressive, a good green candle, I'll probably consider to buy here. Now when I buy at the top, I have to place my SL below this and not below a random low. That is not how I'm going to be trading. It is very important to understand the fact that your invalidation is the most important pointer that you consider while placing your SL. That's the most important point. Now that was another example. But let's see here. We've got Ethereum while it was dumping, alright, making lows, making highs, lows and highs, lows and highs, and then just continue to dump. But right here, I had this particular level that was basically a support resistance. So here what we got to see was market was in a clear downtrend, and it made a lot of sense to have a bearish bias, and that is what I had. But when I got to see this kind of candle on my level, which obviously made it clear that we've got kind of a local sweep, we've got a great candle closing below our resistance, showing us a great rejection, while I was also using volume footprint, which showed me that there were a lot of buyers trapped at the top as well. Now, if you guys are wondering how to use footprint or what's the best way to use it, I've created a lot of videos that you guys can check out on this channel. I do daily live streams where I talk about footprint and all the advanced tools that I use. So guys, make sure to stick to this channel. I'm sure you'll be learning a lot. So yeah, when I look at this chart, when I look at this particular candle and where I plan a short trade as soon as the market goes below that green candle, my SL is not supposed to be above this wick. Now, this is something different. I'm giving you a logic where you're not supposed to do the most obvious thing. So yeah, what would have happened is a lot of traders would have marked this support and resistance level. Correct. I mean, I'm sure if you just mark it randomly, like I mark my levels on the basis of data. Each and every level that I mark are on the basis of certain data. But even if you mark just like randomly or generic support and resistance level, this would have been a resistance level for you as well. So since I can look at this and I know that most of the traders would have definitely marked it, I'm not going to place my SL just above this candle because this is a trend based trade and not a liquidity sweep. So it's very important that you understand the difference between different kinds of trade. So here, as I said, it was a continuation trade. So it's highly possible that the market would have got some kind of rejection, would have got a bit more higher, probably got another sweep on a very smaller time frame, and then it would have just dumped. So as I said, the logic of the trade was trend based. Now, where does it get invalidated? When we make a new higher high, when we make that. So we had this lower high, and if price would have got above it, it would have made a higher high. So in that kind of scenario, my trade gets completely invalidated and I'm happy to get out of it. That is the whole point of trading. You place your SL where the logic gets invalidated and not where your risk management tells you, or not where you feel like placing it. So this approach of professional, it requires you to not look at one particular candle, but look at a whole market structure. That's the most important point, and that is what I always talk about, that it does not matter where a single candle opened or closed. Again, that's fine. A trigger candle, a confirmation candle, yeah, that makes sense. But for you to plan your trades, plan your entries as in targets, it's very important that you understand the context of the market and then you enter into it. Now that was all about the do's and don'ts with your stop losses, and I'm sure even though it was something which was not out of the box or something which was very different, but I'll tell you something, the smallest changes in your trading will make the biggest difference. It will make the biggest impact, and I'm telling you guys from my experience, that is what changed for me. There's no magical wand or there's no magical spell that you can just say and become the best trader out there. No, you need to master the small things that others are avoiding, and then you get to see the results that others are not getting. So that's the most important part here. And a small hack that I would share with you guys is, let's say when I was talking about that liquidity sweep trade just around here. Now I can place my SL wherever I want to. Technically it should be above the wick of the previous candle, but it's always a wiser decision to leave some breathing room. Alright, now this can be pretty subjective. You can place it as per your want, but I'll always tell you that never place your SL just above the candle. Leave some breathing room, because I've seen a lot of trades that have did that. Like they might just go lower, a bit higher, get some kind of pullback, some kind of aggressive wick, and then they just dump. So even though you timed your entry so perfectly well, you might just get stopped out with one random wick, and that is what you don't want to see. So that's a quick tip that I like to share with you guys, that always leave some breathing room if you're placing your SLs above or below the previous highs, lows, or whatever candles you guys are considering. Alright, so that was all for this particular video, and as I said, if you guys are interested in learning about exactly how I trade, you guys can check out the CMM program that I've built. The link to that will be in the description. That is exactly the same strategy that I use how I trade. But this particular video was about making your SL almost impossible to get hit when you trade the next time. Until unless you're going to be gambling, then I cannot guarantee what the outcome of your trade might be. But that's not the point. Here we were discussing about the SLs, and this is what we've learned from this video. And if it was interesting, make sure to comment down below and particularly like this video as well. Thank you so much for watching, and I'll see you guys in the next one.